Welcome to the Big Biz Show, featuring insight, analysis, and a lot of stuff that's none of your business.
Hold on. This is the Big Biz Show. I think it is their business.
Making the markets work for you. Here's the man with the plan.
Hey, there we go, live from the Loft 100 studios in sunny San Diego, California. Big Biz Show is on the air. Good to have you along. Mike Costa.
Hello.
I don't even know what you do here. Executive producer Greg Todoroff. And of course, not only the Day Trader Trio, but the Big Biz Show band here in studio. Come on, give me those. Or something close. You like that?
They've played together before.
They have.
I'm
They're
sensing.
Good. Just not today.
Okay.
Who is the
Crash.
Is Howie Crash fun with us?
Crash is ready to roll.
Howie, what's the weather like in New York City right now? What is it? Is it sunny? Is it muggy? Is it 1,000? What's going? You're in the same place every time.
It must be a little colder than you are with the guns out today. Wow. Look at that.
Oh, did I tell you this segment brought to you by our Ford dealer, the all new Ford Bronco? I forgot to tell you.
I love it.
Look at this. Look at the brand new Ford Bronco here and the Bronco Sport. I forgot they had sent me a T-shirt that said Ford Bronco because they were considering. Look at that nice car there.
Look at that.
But two of the girls have Bronco Sports. This is the new Ford Bronco, of course. I purchased a Ford Bronco a couple years ago and had it painted like my dad's 1972 Ford Bronco in the mint.
What officially is that color?
It's called 1972 mint green, or seafoam green, or something
awesome.
like that. Yeah,
love it.
So it looks. But there you go, the new Ford Bronco, potentially a new sponsor here in the program. Here,
Please.
They sent me shirts. They said, "Hey, we're interested in Big Biz."
Hello.
So there you go. So yeah, that's why I can't go to church, because they don't allow guns at church, man. Okay, very good. I don't lift any weights. I just had a salty meal last night. That's what it is. Howie, so back to the weather over there in New York. Is it hot and humid?
Yeah, it's now summertime. July is peak unbearable in New York, so the heat radiates off itself. There's no breeze like you guys have. So
do you even go outside in New York in the 3 summer months of June through September, or July through September?
At night, quickly to go somewhere else inside. Yeah.
All right. Hey, what's happening? We are on the third or fourth day of trading here in the third quarter, believe it or not. So July represents the second half of the year, the third quarter. You maintain we're going to have less volatility and so on and so forth. What's the latest? Anything off of those words?
Throughout July, I think that's largely true. I did want to show a little piece of information that kind of demonstrates what we've been saying. You always say correctly, if it was a good buy at that price, then it's got to be a great buy now. In normal human psychology, always think, oh my gosh, really? Why can't I wait for a discount? Why can't I wait for a discount? Well,
we are at a discount. I mean, if you compare the S&P right now
to the future,
to 2009, when 2009 the S&P was under 1,000, and today we're talking about closing at 6,000 at the end of the year, or 5,500 or something like that. If the Dow was a bargain in 2009, it's a bargain now. What's it going to be in 15 years, right? I mean, it's the same principles we've had all along. That's my philosophy. When people get into a stock, you get into a stock for the same reasons that you get into any investment. It's a good investment. If you look at it, just because this snapshot in time, let's say Apple, for example, might be waning, and I don't know if it is. I haven't looked at a chart. But long story short, if Apple is taking a nut-filled in the front yard right now, that's a snapshot in time. If you are near retirement, are you going to take all your money out, put it on the kitchen table, and stare at it? No, it's going to work for you. So if Apple was a good buy, if you like Apple for the same reasons you purchased it before, and it went like this up, and now it's down, do you still like Apple? You don't like the price.
Do you consider, what's it called, the PE ratio?
Sometimes.
Sometimes? Is that what
Sometimes.
it is?
But if I'm a long-term holder, I'm a long-term holder. I mean, unless I'm day trading, and why would you do that? I mean, I talk about individual stocks. I day trade less than 0.5% of my portfolio. Seriously. 99.995% of my portfolio is managed by a professional money manager.
Yep.
So I don't mess with it. Howie, stay right there. We're going to get more to you. Big Biz
Smart
Show.
way to do it. Yeah.
Lots of stuff coming up today. We got Joe the Lip LaRosa, Joey Bag of Donuts, Steve Brady back from Tempest Therapeutics will be with us.
Did you say nut-filled you know what?
Yeah, I did. Rottweiler.
It is the Big Biz Show. We are live from the Loft 100 studios in sunny Southern California. Wherever you are watching, wherever you are listening, we always appreciate you being along for the ride. I'm Costa. That's our executive producer, Greg Todorov. The man right there in the Bronco t-shirt, Sully.
That's right, our Ford Bronco sponsorship could be on the way. Of course, the new Ford Bronco 2025. Have you been in one yet?
I haven't.
Look at that thing. Right there,
Pretty
that's
badass.
San Diego today. If you drive a Bronco, it starts snowing.
Yeah.
I'm sorry, that's Colombia or Peru. Beg your pardon. Drug deal gone bad. The new Ford Bronco, also brought to you by nothing says summer like a sausage.
Look at that. Oh my God.
Folks,
This is what I said. This is what I found. I found this in Mike's locker.
yep.
So have you seen the new Randy Savage? So meaty, it's savage.
Wait a minute.
Mike, it was.
Sure that's
so-
new?
Yeah.
Because those last for like 30 years.
Yeah, this
Cockroaches
I'm sorry.
and
When I said
Slim
locker,
Jims.
I meant his high school locker. There's your Slim Jim. Actually, that's compliments of Jason Banks, our floor director.
J-Bay, thank you.
Where do you get those things? I mean, do they come in like a those old steel trash cans when you walk into the 7-Eleven?
Oh, maybe.
You know, the kind that used to make noises.
Yeah. It comes in now because my son just ordered some off of Amazon. It comes in what would look like a Jenga box that you put the Jenga things in.
Really?
So it's a big Slim Jim.
You know that you're at the peak
Square
of fitness
tube.
when you walk in Mike's front door and on the counter is the barrel of monkey-sized Cheetos balls, the Jenga with the sausage sticking out of it.
100%.
And then do you also have
Red vines in a big bucket.
yeah, red vines in a
of
big
course.
bucket?
Yeah, in a big.
And then fire funyuns.
No, we don't. We do not have fire funyuns.
But you do have a Folgers can full of Bako Bits. Would you?
I love
if you
Bako
could
Bits.
dip a Funyun into into Miracle Whip salad dressing and then into the Bako Bits.
Oh my God. Oh my God.
That's almost like a Kraft donut.
Just talk. Oh my God.
Don't speak.
Please. Hold on. Will you
Don't
text
speak.
that to me so I don't forget?
Like what's up?
Oh.
Will you text that to me? I think we should have a cooking segment with you. I think because you have a college son, don't you, or a college-aged son?
Yeah.
I'd be interested in seeing what they're. Because when we were in school, we were just dipping into the veggie burrito. That was like the cool hippie thing.
Right.
Okay. But then at midnight we were still eating carne asada. One morning, stinking of tequila, driving through the drive-thru.
Pretty much.
But now, so what are they? So what are the kids eating? What are the?
You know, a lot of it now is instant ramen, but they gussy it up. You know, like I'll walk into the kitchen to get a drink of water like at 12:30 or 1.
You actually pick up a glass of ramen. That's not ramen, Mike.
Tobacco spit. No. I'll walk in and he's over a bowl of ramen and he's dropped an egg in there.
Oh, he's doctoring it up.
Yeah, and I go,
no
dude, but he's a vampire.
Yeah.
He's up to like 3. They're all up to like 2 and 3.
Well, it's the sodium, He's puffy and
Exactly. Pretty much.
Is there anything more delicious though, aside from tequila, than ramen? I mean, seriously, I believe it's not a mistake. It's
good.
It is processed flour,
Yep.
fried,
Yep.
and then with preservatives into a
rehydrated.
plastic. I'm not talking about the real ramen. I'm talking about because the real stuff is it's all delicious.
You're talking top ramen.
I'm talking cup of noodles.
Cup of noodles, baby.
I'm talking in the styrofoam,
Yep.
non-biodegradable, inside the plastic, inside the aluminum that is coated with plastic, inside the preservative-ridden fried noodle dish.
The boss came in one time and I had a cup of noodles in front of me. And she's, hey, honey, what you having? I go, cup of noodles. And she stopped and she went, what's that in there? I had taken an Oscar Mayer hot dog and chopped up the hot dog.
Yeah.
What is with?
I'm telling you, game changer.
What about spam? Where do you sit on spam?
We've got a couple Tims of spam. Tims of spam in our cupboard. Absolutely.
Really?
Yeah, I just bought the.
Is it the spam with the cheese flecks in it, or is this?
No,
regular
this
spam?
is the regular spam, just like an army ration type of thing.
Do you put? Are you a syrup and spam guy?
Nope. No, I'm breakfast sandwich spam. So slice it, brown it on both sides.
Oh, brown it.
Yep.
Not just cook it. We're browning it.
egg,
cheddar
cheese on a breakfast
Are you caramelizing
roll,
it on either side also?
either on an English
Bobby
muffin
Flay.
or a bagel
I think there is a TV show,
Krispy Kreme donut.
Like I believe there. Oh, I believe there is a. I think there is a cooking show waiting to happen for, guilty pleasures.
Yes, there is.
SpaghettiOs mixed with, hot dogs.
We've got a can of SpaghettiOs in the pantry.
Do you really?
Just, you never know. Rainy day, right?
Yeah.
You never know.
Nuclear winter.
Oh, me and Greg kind of know.
You never know.
I know.
You never know.
If there's a kid,
when the world's going to come to an end. So you got to have that.
No, it's like I got like right here. Before I open that, it's like I'm probably using the can to beat myself in the head, to kill myself, rather than go with that. Howie, you're a young lad on Wall Street, although making more money than all of us as a trader. There's an article out today in I think Investors Business Daily about the new snack food trends, and how it is affecting portfolios. The reason I'm talking about this is that there was a big rebalance of portfolios yesterday in the Russell 2000. There's a big rebalance of portfolios in a number of things, and the food sector suddenly is coming front and center because of the changing mores. We seem to be healthier, but apparently we're not. Howie, have you ever seen a food segment actually take over a rebalancing, much like biotech does, or much like, because I've never seen like the Slim Jim index. Where do we stand on this? Is this a temporary? This is a temporary thing. I was wondering.
These are This looks to be a temporary thing. The food industry is largely part of the broader economy. It sits with staples. It doesn't really move that much. So this is a really interesting development, but probably a temporary one.
But if we look at the consumer price index, CPI strips out food and gas, which makes it a worthless index, because what are the two things we're spending most of our money on?
Yep.
Bricks of cheeses at Costco to build a house out of cheese, of course, and then of course gas. But these are all sort of temporary, and they're almost also open-air indicators, aren't they, Howie? In terms of, you don't want to set your investment goals based upon rebalancing, correct?
No, that's right. And things shift more with food than they usually go down, because there's a total calorie amount that the population needs to survive. It's just, are we buying Wagyu beef, or are we buying, a couple noodles and getting an Oscar Mayer wiener?
We're talking.
Had to throw a wiener in there, didn't you?
Now we're talking.
There you go, Howard. Okay, buddy. Thank you so much, Howie Font, of course, our market expert right out of New York City. Howie and Devin go to Wall Street. Another episode coming out very soon. Do you have another? What's the next? Is there a new one coming out, Devin? There's a few. Oh, there's a few. Okay. We need to create a YouTube channel where I can monetize this thing. So I called it first.
Nice.
Right?
Just
there.
Good for you.
Speaking of the food sector, you'll notice that one of our sponsors, Bloomin' Brands, who owns Outback Steakhouse, Fleming's Steakhouse, Carrabba's Italian Grill, Leroy Selman's Barbecue, and Iron Fish. And of course, love that Outback Steakhouse, of course, for the authentic Australian food, because there's bloomin' onions grown on the side of the road between Melbourne and Sydney.
They harvest them 365.
Bloomin' Brands showing a record profit. So what does that tell you? What does that tell you?
Going out and spending money.
Exactly.
Yep. Big time.
So it's what I talked about yesterday. And that is the fact that you have this garbage inflation. Okay, and let's use the excise tax
Rubber
analogy.
tires, right?
There was a tax on rubber that never went away. Okay, so we're used to it. You buy a set of tires. Take a set of tires. Okay, you buy a set of tires, and you look at the taxes, but you're not looking at why you're paying those taxes. Just like California and their gas prices. If you look at gasbuddy.com, this inflation we're used to, which is why the stock market is going north. We're not complaining. I mean, we complain about inflation, but people are refinancing their mortgages at 5%. You wouldn't consider. I was doing voiceover work on local radio for you when it was keep it in the twos. If you don't, if your mortgage is not in the twos, then don't refinance. We're used to it now, and what that portends in the future is probably stagflation, which is a little bit scary for us. So I think going forward, I mean, what are you willing to put up with at this point? Because who has paid less than $5 a gallon for gas?
Well, I also get the impression, too, that people are like, you mentioned Outback Steakhouse. You know what? Screw it. I'll take the family out to Outback Steakhouse. I won't make that trip to Home Depot this Saturday, or I won't do this.
Notice he didn't say won't go to 7-Eleven.
Right.
For the
right.
No.
That's Slim Jim and fun.
Priorities. But I think people are willing to kind of go, okay.
Yeah, honey, I don't think we should buy those garden things. We can't afford it, so no gardening this weekend.
Right.
Yeah, no.
Sweetheart, no,
I don't
we're
think
not
we should buy
buying.
those organizational bins for the garage. So guess what?
Well, yeah,
we can't clean the garage this weekend.
right.
Just trying to save money for the fam, hon.
That's it. Maybe a little bit of the rob Peter to pay Paul mindset.
Well, because we did have fits, literally had fits about inflation, how much, I mean, look, we're talking about the cost of just milk and eggs and steak and everything else.
Yeah.
And as a result of that, it seems like nothing has really changed in that department. Wages haven't really gone up. We're just used to it. And that's
What I think is changing?
Yeah.
Consumer debt.
Yeah, consumer debt is changing. That's a great topic, too. We had the lowest amount of debt, the most money in the bank during the first stimulus of COVID. That's all we need is one. And the fact that we had more than one killed the whole thing. All right, Big Biz Show, BigBizShow.com. I've got Joe LaRosa coming up in just a few minutes here. Stand by, Big Show.
Loft 100 Studios, that's where we are because it is the Big Biz Show. Costa, Greg Todoroff, our executive producer, and that man right there, Sully.
Little Earth Wind for you.
Love it.
Earth, Wind, and Fire.
Big
From the
fan.
Big Biz band. All right, let's get to it. Joe LaRosa is the founder and CEO of LaRosa Holdings Corporation. Of course, you can go to joinlarosa.com. Lots of new news out recently, and they are disrupting the real estate market and the real estate model. And of course, almost every week you see something sort of groundbreaking. In fact, Joe, I'm going to let you kick off what the news was today here for the second day of trading in the third quarter. What's up? Good looking. Best good looking client we have right there. Got to get. I can't even have him in studio. I won't be able to handle it. Hey, Joe, talk about your news today, pal.
Hey, I appreciate it. So yeah, we've had a record month for the month of June. So we've been very excited over these last few months as we've been kind of preparing this new, very disruptive revenue share model that we were going to the market with, and we had attracted a team of team leaders over the month prior, and that led to about 200 agents actually now joining our company here in the month of June. So we're very excited for this new momentum that we've been able to create, and really now kind of taking us to what's going to be a very strong second half of 2024.
Hey, Joe, talk about, for the folks that didn't catch you the last couple times, because we picked up some new affiliates across the country. As a publicly traded company, by the way, LRHC is their stock symbol, LRHC, for LaRosa Holding Corporation. Talk about what you guys are doing to disrupt the real estate market. This, you talk about agents joining. You guys really are doing something completely different that no one else has done before. Talk about that. Just review for us and those viewers that haven't seen it before.
Yeah, no, look, I mean, obviously there's changes taking place within the real estate industry, right? Within the real estate transaction itself. So we've always been very consumer centric and very focused on the consumer experience. But as of late, we really have been also focusing on the agent experience and really trying to really define what it is to be agent centric in the real estate industry. And we're looking to become now one of the new leaders here over these next 2 or 3 years by adding as much value as we can to agents. So we really have two very competitive commission plans that have been very disruptive in the market and has really allowed us to be able to have this explosive growth in the states that we've been operating in. And, we're excited for what we feel is going to really now catapult us to that upper echelon of real estate companies here going forward by just focusing on what's best for the agents, either by offering them 100% commission or by offering them an opportunity to supplement some of their revenue by introducing a revenue share model that allows them to go out there and recruit other agents to become part of now their own team within LaRosa Realty.
Joe LaRosa, the founder and CEO of LaRosa Holdings Corporation, their ticker symbol LRHC. Website, go to it, joinlarosa.com. Joe, with the fact that you are disrupting like you are there black vans parked outside your house, or are you
20th century or whatever?
Right. Are you seeing copycats maybe starting to emerge a little bit?
Yeah, of course. I mean, there's always going to be folks, and we take that as a compliment, not the black vans, but the copycats.
Okay.
So haven't had the issue with the black vans, but yeah, there's definitely folks that are out there trying to, kind of see that what's going to be the next trend in the real estate industry. And, you're going to see a rather large shift from these older school type real estate brokerage models to what we feel is going to be the model of the future. And that's, again, just trying to create as much value as you can to agents, giving agents the ability to have more financial flexibility and freedom, And we're doing that by either offering them 100% commission or in a revenue share plan. So we're very excited for those that are copying us in some way. It's in essence, it's a compliment to what we're doing.
The news today is sort of a testament to the fact that you're moving the needle in terms of disruptive real estate technology. I mean, now if you got the brokers buying into it, that's everything. I mean, because the customers, us that sell and buy homes, sell and buy buildings, we're going to buy into whatever the brokers tell us to do. Isn't that the toughest part? What you just accomplished, isn't that the toughest part of the entire process?
Yeah, no, absolutely. Like when we first went public back in October, we were the new kids on the block in regards to, being a real estate company that's publicly traded. And, I'm sure, a lot of folks were hearing us tell this story about what our plans were, which was probably very comparable to what others maybe have tried to say. But, listen, I've always been, all about just execution and going out there and just focusing on, regardless of whatever noise is out there, just making sure that we can go out there and execute on our, game plan and to be able to deliver. And that will speak volumes. That will actually then give you the greatest return when you're able to actually kind of not just talk the talk, but walk the walk as well. So we've been able to do that, which is why you're seeing agents now migrate to, to our company. And you're going to see more of that now here coming forward. And that will, again, it's like a snowball. It's going to, again, now to pick up more and more momentum here as we go into 2024 and 2025 and beyond. So we're very excited for that.
Joe, what does it look like for a 50-state takeover at some point? I mean, is that the idea?
Yeah, absolutely. I mean, the way our business model works, we definitely want to go to markets where there's high transaction volume. But that's always going to be in the forefront for when we're looking to expand into newer markets. But right now we're having conversations with folks in all different states that we're not operating in today. In fact, we actually just signed an LOI just recently with a company that's going to allow us to go into 4 different states that we're not currently operating in. So the expectation is, and this is what we had actually in our press release today, we'll be at north of 4,000 agents by the end of this year.
Wow.
And we're going to look to continue to actually double that now, year after year, which is going to be a challenge, but we feel that we're definitely, ones to be able to meet that challenge.
Hey, Joe, when you talk about growth plans for 2024, is that the growth plan, more agents and more brokers? Is that really what it comes down to?
Yeah, absolutely. Absolutely. We, if you look at, other real estate brokerages in today's day and age, just because of the environment that we're in, they've seen a decrease in their agent count, where anywhere from 10, 15%. We've actually seen a pretty large increase. And so we expect to continue to see that increase now here moving forward. So agent count is definitely going to be one of the major focuses for us to continue to be able to grow that, because that's also going to feed all of our other ancillary services. We have multiple other businesses that are built around LaRosa Realty that also create additional revenue streams into LaRosa Holdings.
Hey, before we let you out of here, we got to talk about the mortgage rate market here. People talk about interest rates and inflation, but that Fed rate we hear about doesn't really affect mortgage rates right away because it's a discount window and it affects savings rates and credit cards and car loans. But the mortgage follows the long bond. So talk about where mortgage rates are going to end. I mean, we were living it up on that 2% and 3% mortgage thing, and now people are readily accepting 5+% interest rates for mortgages. Is that going to change anytime soon, in your opinion? What are you seeing out there?
Well, listen, it's interesting to see over these last several weeks where there's been, the Feds haven't obviously cut the rates, but really what you have to look at is the 10-year Treasury. Yeah. And whenever there's any kind of a decrease in that, you're going to see obviously where mortgage rates are going to get impacted. So we've seen over the last few weeks a slight deduction in mortgage rates, and that's actually created a high demand in new mortgage applications, which to me shows us that there's definitely this pent up demand that's waiting on the sideline. So my expectation really is going to be probably more after the election going into 2025 before we see any real drastic cuts. I mean, I don't want to upset anybody by saying
no. Listen, that's why we asked you.
Again.
You're our expert. Yeah. That's why we're asking, because I can't see anything happening until after the election either. Because look, this is a long soak here. As I said yesterday, the economy got shut down like a light switch, but it's coming back like a sunrise. And you're not going to see us back in the twos. It's not a matter of months. It's a matter of a year and a half, 18 months before we even get close to that.
Right.
Got a tame inflation. Joe LaRosa is his name. Thanks, pal. Appreciate it. Founder and CEO.
Oh, I appreciate it, guys.
LaRosa Holdings Corp. We got to get you in San Diego, buddy. Go to their website, joinlarosa.com. You get information on the company, the stock, as well as if you're an agent in one of their locations.
Imagine how the phone is bring it off the hook in his office.
Because of us.
Oh, for
Thank
sure.
you. Can I please join the LaRosa team? And they say your name?
Yeah.
Do a little agent check on Mike Costa.
Loft 100 Studios, The Big Biz Show, our affiliates, and our hosts are not registered investment advisors or broker-dealers.
Our show hosts make no commitment that the purchase of securities of companies profiled or otherwise mentioned in our programming
are suitable or advisable for any persons, or that investment in such securities would be profitable in general.
Given the nature of our company's profile and the lack of an active trading market for their securities, and investing is highly speculative and carries a high degree of risk. We profile selected publicly traded and privately held companies on our program.
Most of these companies that we profile have provided compensation to Loft 100 Studios and its host for the profile coverage.
3, 2, 1. From time to time, we sell shares of the companies profiled in the open market that we receive as compensation for coverage of client companies.
But never sell stock if we are speaking about, interviewing, or covering a public company who has paid compensation.
Specific questions on compensation can be obtained by contacting producer at sullyandgroup.com.
Listeners should verify all claims and do their own due diligence before investing in any securities mentioned on this program.
Investing in securities is speculative and carries a high degree of risk.
We encourage our investors to invest carefully. Duh.
And read the investor information available on the website.
On the Securities and Exchange Commission, SEC, at www.sec.
Or the Financial Industry Regulatory Authority, FINRA, at www.finra.org.
I smell Emmy.
That's right, it is the Big Biz Show. The Loft 100 Studios, wherever you're watching, wherever you're listening, even in space. Thanks for being along for the ride. Costa, Greg Todorov, and Sully.
I would argue that people pay more attention to the disclaimer and the admonitions when they're watching something like that.
I agree.
An astronaut in flip-flops in space?
Exactly right.
You're welcome,
That's Tristan.
America.
Exactly.
World.
Yeah, welcome, world. Steve Brady, of course, is the CEO of Tempest Therapeutics, stock symbol TPST, TempestTX.com, of course, innovative targeted immune-mediated cancer therapies. The number one gaining stock in the history of the stock market for a one-day gainer happened last, I think it was October, if I'm not mistaken.
Unbelievable.
Was it May? It was an unbelievable top-line phase 2 data. It comes out with even better data, and finally, from the labs, where all of the test tubes are, and the boiling of water, and the whatever else goes on in there. Steve Brady comes out as CEO. That's how important we are. Steve, what's up, brother? Good to talk to you, man.
Hey, guys. Good morning. Thanks for having me back.
I am so happy to have you back, and we can't wait to get you back in studio here in the next couple of weeks. I want you to give us a quick reminder of who Tempest is, because we haven't had you for a while, and there's about to be airing very shortly a Bizumentary here on not only Bloomberg, but BizTV and American Life Network about the space, and of course Tempest Therapeutics is featured in that because Steve's company. Talk about what you guys do, pal.
Yeah, so thank you for pulling up the website because it's a great little summary title on there. So we are an oncology biotech company. We are clinical stage. We have programs ranging all the way from early stage research where we haven't publicized it yet because we think we're working on targets where no one else has programs, all the way up through clinical stage programs where, as you noted, we released some really exciting data in October that the stock market reacted, the stock went ballistic. In first-line liver cancer, we've discussed that in the past. It's an area of significant unmet need, unfortunately, for those patients. And then just a few weeks ago, we came out with a follow-up data set, actually more important from the perspective of getting this molecule potentially to patients. Molecule's called amezalpat, as you can see there. It used to be called TPST 1120. As things move forward, as you know, they get their generic name. And so we're really excited to be talking to you guys today. It's a great time in the life cycle of the company, that program, and hopefully eventually, fingers crossed, for patients.
Let's talk about the news and, of course, the stuff you just talked about here, because I think for the rest of us who are not scientists, it's important for us to take a look and see what it really means for us, because it starts getting exciting. When people start asking questions like, when is this coming to market? That means that there's already adoption out here in the patient community, which means there's going to be adoption in the physician community. Talk about that.
Yeah, so amezalpat, previously TPST 1120, is designed to hit a target called PPAR alpha, right? And we won't go down the deep science track. But the reason I bring it up is because it makes sense that it should be working in liver cancer. That target is expressed in liver cancer. Liver cancer is nasty, as you know. It is not a great prognosis. The most popular standard of care that physicians use around the world. There's a single dominant therapy that first-line liver cancer patients get. At its high point in its approval study, it had a 19-month median OS. So think about that, right? You first get diagnosed, and the median, OS for you, that is survival, is 19 months. And there's a bunch of data that's come out since that it's actually lower than that. In what we call real world patient population. So if you think about your family member, your spouse, your loved ones getting that, you want to improve that.
Yeah.
Right.
It's true. And I think you're talking about not only curing, now you're talking about quality of life, which is a 1-2 punch for a drug like yours.
Absolutely. When I started out in oncology, we didn't talk about quality of life very much. It was all about just keeping people alive. Well, what's the point of being alive if you're not actually living? Right? If you're sitting there with toxicity profiles that make you miserable, I would argue that's not living. And one of the things that I am very excited about is, and especially in the data we released in October and what we just talked about a few weeks ago, when you look at what amezalpat does, when you combine it with that standard of care and you compare it to the standard of care, it's what we would call a manageable safety profile, meaning it is not adding any unreasonable toxicity to the standard of care, which is great. But what it is doing in the data we just released is two important things, right? When we talked in October, we had things what we would call surrogates for survival. We had all these directionally correct data sets, all pointing towards survival. That's what you care about in first-line liver cancer. That is the global regulatory endpoint. You said about getting the drug to people, eventually getting it on the market. That's what you need to hit. Well, we didn't have that in October when everybody was really happy, but we had everything pointing in the right direction. And what we just disclosed a few weeks ago is a 6-month improvement over the standard of care. And there's this other thing, again, we promised we weren't going to get too technical, but this thing called hazard ratio that's really important. And what you want is a stable hazard ratio, right? It's a predictor for a successful phase 3. And in the 10 months between the 2 times we measured the hazard ratio, it barely moved. So that translates in plain English. And am I confident in what I'm seeing? How confident am I that that's going to replicate itself, that that's going to be seen in a phase 3? And it barely moved from 0.6 to 0.65 over 10 months, which our statisticians and the folks inside the company were thrilled about.
Steve Brady, the CEO of Tempest Therapeutics, ticker symbol TPST, with us here in the Big Biz. Steve, does liver cancer paint with a pretty broad brush as far as young kids, teenagers, adults, old people?
It tends to be the liver cancer that we're talking about tends to be not kids, thank God. There are other indications that, as you know, that are. Sure. But people, you can get this in your 40s. And for you and me, Mike, that's, we're past that, I think. So, these are people, just a little bit. These are people who get this disease. And unfortunately, when you get that diagnosis, you usually don't have long to live.
Yeah.
I got an email here from a Mike Costa from San Diego asking for a friend. Does drinking cause liver cancer? Mike, you could have just asked him yourself. Actually, all kidding aside, though, you talked about lifestyle changes in liver cancer, Steve. You talk about it in the documentary and everything else. Talk about that a little bit, because it is something to consider.
Well, liver cancer has multiple causes, right? In different parts of the world, there's viral causes to liver cancer. There are lifestyle causes to liver cancer, more in the U.S. and Europe. There isn't a perfect way, to give you advice saying, this is the way you're not going to get it. There's genetic aspects to it as well. What we're trying to do is, if you unfortunately get this diagnosis, we want to be able to give you eventually amezalpat plus the standard of care and have you live a longer life with a quality of life.
2 things real quickly. because I know I'm going to get emails on this, and I know you covered it briefly. Can you tie in the research from October and the research now? Is it just the endpoints better, the extra 6 months? Give me a couple bullet points. I know we're going to get email on this.
Yeah, no, I mean, everything that was one of the beautiful things about the data from this study, and again, this is a randomized phase 2 study. That's the gold standard. If before you're going to go and do a big pivotal study, you want randomized data, and that's this study. The first time we looked, we talked about it in April, everything was looking directionally correct. Then we had the actual top line data cut that you mentioned earlier in October. That was all directionally correct to this. What changed is that everything we were predicting that we were hoping we were going to see based on what we saw actually happened. And there was one other thing too. We went deeper into the data because we're going to be talking to FDA this summer about the phase 3. We went deeper into the data and we looked at subpopulations, people based on age and viral status and different things. And that survival benefit we saw in the overall population, which is what you'd be going for in your phase 3, that was maintained across key subpopulations.
Yeah. Well, Steve, listen, we never get enough time with you, and I want to have you next week because I want to talk about two things. Because there was a market disconnect on this this news because people didn't understand it. Number two, we really got to talk about what's next for you guys, in so much as you can talk about as a CEO of a publicly traded company. His name is Steve Brady. Of course, Steve Brady is the CEO of Tempest Therapeutics, TPST. You're going to see him again next week. Steve, thanks, bud. Appreciate you coming back with us. TempestTX.com. Once again, TPST.
Let's get start getting hot now. The rest of the country is really, really cooking. Are you really? Oh.
You're going to Vegas?
Yeah. 9 days in Vegas.
Costa, Mary Godwin, Greg Todorov, and Sully. Why you go? Do you have to go to Vegas?
I do. My kids' national dance competition.
Really?
9 days inside, though, every day.
Yeah. So you're not going to Vegas. I guess I couldn't hang in Vegas for one day.
No. It's not to hang out. I have dinner reservations on one night.
The topic of long-term energy storage, battery storage keeps coming up. We had Eric Dresselhuys on just recently. Of course, he's the CEO of S Inc. That's ESS Inc. Their stock symbol is GWH. You can go to sinc.com. And we started talking about the iron flow batteries being a game changer for renewable energy. And we've been talking about it on and off. But after the show last time, since we dug right into some of the news stories that were coming out, we got a ton of email about Eric. I want to bring him back on again to talk about this because there is a big difference between the status quo and where it's going. And it's going there quicker because when we first started talking to Eric about a year ago, this was sort of, when things change and now they are changing and it's happening. And I guess my first question, Eric, and welcome back to the program, is this a surprise to you in comparison to last year, how fast things are moving? Because I know from our side, it was like, what is this thing you call iron flow? And it's going to change to this at some point, but now we're here. I mean, we are more here than we probably ever have been. Talk about that just a little bit.
Yeah, sure, Sully. Hey, thanks for having me. And I apologize. It probably looks like I'm calling from the back cave, but...
Eric, blink twice if you're being held against your will.
Exactly. He's in another country, by the way.
Okay.
I'm actually in the UK now. We just wrapped up the Breakthrough Energy Summit. This is Bill Gates's big initiative around the energy transition. And but to get to your question, I think that people that really understand the energy system are not surprised.
Right.
But the general public and the awareness that this has gotten and how fast it has ramped is a little bit of a surprise because, normally things, take a little time to incubate in the public domain. And all of the sudden people are saying, wow, long duration storage that is safe, it's easily sourced, it's got an incredibly low cost point, and it's not made in China. It seems like a good idea.
Eric, I'm sorry, Eric, as you look down the road, do you see the floodgates eventually just bursting open? Are we on that trajectory to where everybody is like, okay, we obviously need this and we need it now?
Well, I think the thing that's come up in so many of the conversations here has been, is there a path to getting to this future state without long duration storage? And kind of everybody that knows what they're talking about says no. And then the second question is, what do you want to build? And everybody, kind of characterizes our product. So even if you don't know us, you kind of describe what we do.
Eric, talk about the confab that you're at right now, and what are some of the findings, and what's some of the political will looking like in terms of what people are doing, and is this an optimistic event for you so far, or are any surprises?
Yeah, it's been a hugely optimistic event. I'd say if there was any disappointment, it's that Prince William spoke, but he didn't bring Kate.
I would be disappointed in that.
I would
as well.
too, exactly.
So, but it's interesting. Of course, a lot of politics going on in the U.S., in Europe, in the UK. There's an election here in the UK, and what's kind of interesting about it is everybody says, well, this election's happening, but at the end of that, no matter what the outcome, the energy transition is marching along. We did this event in an event space that was only modestly air conditioned, as only the Europeans can do.
Yes, and there was no ice at all in any of the drinks.
Ever in anything. And, it was like 80, 88, 80, 86 degrees and incredibly humid. And all of the Brits were saying, golly, this is unusual. And that's really the theme everywhere you go in the world. The U.S. is just coming out of a big heat snap. And, we've got to do something about it. So I think the train's on the tracks and it's rolling down. And there's, it's only a question of how fast we can accelerate.
Well, just to put a finer point on that, there's a lot of political will, as evidenced by some of the visitors you continually have there at your facilities, as we saw last year, and we saw with some of the footage we showed last time. Is the same political will present? I mean, London and such, obviously a huge clean town, feels like Calgary in terms of awareness, but gosh, it seems like the U.S. is always the mouthiest one, and of course going all the way back to solar heat with the German country being the leader of that. Is it the same everywhere, or are we still leading the charge here, or are we even leading anymore at all?
Well, I don't know that we're leading. I think that it is a global issue, so you're absolutely right about that. And, one thing about energy is, Tip O'Neill used to have a great line that all politics are local. And my hack on that is that all energy is local, right?
Yeah, that's true. Right.
If it's hot where you live, it's hot, right? And if you're having problems paying your energy bill because the bill keeps going up, it's a local issue. And everywhere you go in the world, these are issues that are top of mind for people. They affect how fast we can grow as an economy, and they affect the quality of life of individual people and their families. And so, to that extent, it's a global issue, Sully.
Well, Eric, I think of this in terms of how internet radio came about and how the EV came about. Internet radio was a thing we talked about. It's something we all knew was going to be good. And until you could actually push a button until it was easy enough to push a button on your dashboard, then I see, this is it. This is the thing. And now more people are consuming podcasts than they are actually listening to terrestrial radio. Same thing with EVs. Oh my gosh, this seems like a great idea. Now you can't look 3 feet without seeing an EV on the roads. I sort of feel like this is the same way. Once the adoption rate gets there where it's a no duh, it's an obvious, then it goes global in every single city in the U.S. And then from there it goes. Is that accurate? Because I think the aha moment needs to happen to the consumer as well, correct?
Well, I think you're right. I think the difference in electricity is that it's going to happen invisibly in the background, right? You're just going to flip the light switch, the lights are going to come on, and everything is going to work. And when that stops happening, that's going to be a problem.
Well, but at the end of the month, though, your bill's also going to be less, correct?
Yeah, absolutely. Your bill's going to be less. You're going to know that you didn't kind of kill the earth along the way. And I think for a lot of people, the fact that we can produce the electricity that we need to run the economy on a local basis and not have reliance on overseas, suppliers is a big deal too. So all of that's going to happen, and it's going to happen in the U.S. It's going to happen in Europe, and I think it's going to happen around the world.
Well, his name is Eric Dresselhuys. Eric, thank you so much. I appreciate it once again. Get to bed there. It's I think it's way past your bedtime. Get out of the bat cage, and thanks so much. We'll have you back as soon as we got to get him to San Diego at some point.
I agree.
He's on the same coast. Are you comfortable with not having a coal-fired energy system here in our city?
In California, I'm okay with it, but there's, because we have natural gas, we've got solar, we've got all these different, but there's other parts of the country, like they're relying on one element.
But here's the real question. You guys are all used to $5 gas, except for him.
Oh, I know.
$5 gas is a reality. 2 years ago, $3 gas was barely reality.
Exactly.
What's your gas bill look like? What's your electric bill look like?
Oh.
It's reality.
Very high.
Yeah, big time.
But you're used to it.